recognized.
Thank you, Mr. Chair. Chair Powell, thank you for being here. I got a quick question. Yesterday, Governor Cook said in this committee that the Basel Endgame proposal from the vice chair, she has not had an opportunity to look at it. Now we hear reports that I think that it's 1,000 pages long, probably with a lot of technical information. How much time are the voting principals going to have to fully review and vet this proposal? And is there any expectation that that review would result in any changes, or is it just a matter of them either saying yes or no, they agree with Barr's recommendations?
So, I would say I will make sure that there's enough time for governors to review the final proposal. We've been briefed on the contents of it, and it's still in motion. There will be a proposal that comes to the board for approval, and it'll be subject to discussion, and it's possible there would be further changes before the vote or as a result of the vote, but we'll make sure people have time to review it. As
you're going through the review process, do you believe that it would be appropriate to give members of this committee or members of Congress a sort of roadmap for what the recommendations entail prior to moving forward?
So I think that'll happen, I think that'll happen because I think Vice Chair Barr would probably be giving public remarks at some point before the meeting, and I guess I understand now that the head of the FDIC actually gave a speech this morning. I didn't see it, but I know he gave a speech about this subject.
Can you explain why comments from Mr. Barr about having a safe and sound banking system square with a banking system that needs additional capital?
So that's the question is, of course, we spent all those years raising capital for the largest banks, and I think further increases will have to be justified, and they will be. We've always known that the Basel III endgame was going to bring some capital increases and bring a discussion about the trade-offs, and there are trade-offs between higher capital, and that's the discussion we're going to be having, and we haven't had it yet, but we will.
I watched your opening testimony in my office. Actually, Gus was there. He says hello. Chair Powell's met my office dog, but
hello back to Gus.
But
tell him I said he was a good boy.
Mr. Chair, you've you got me. I'm kind of curious about Silicon Valley Bank now. Yesterday, we had an appropriate hearing and a markup on executive compensation. I voted against it for a couple of reasons. I think we need to work on more tailoring, and I hope as it moves through, we can work in good faith to address some things that would get me to a yes. But another reason why, or one of the concerns I had about that meeting is I think we could pass an executive comp bill and think that we're done with the root causes of Silicon Valley Bank. I, for one, think it was equal parts of management malpractice and supervisory malpractice. So the question I have is who in the Fed is ultimately going to give me a straight answer on what the breakdowns were in the supervisory functions, who those people were, and to the extent that we found less than adequate supervision, what's the disposition of their jobs? Who's that person? Because I ask everybody and they say it's not in their lane. So who is the person that owns me? In the same way that we've mapped the CEO and various members of the bank having made egregious decisions that they should have their compensation clawed back, who can I talk to that says we've looked at the supervisory process, here were some lapses, they didn't use the optionality of 2155. We now are seeing increased reports of MRAs and MRIAs, so I think there are supervisors out there that are probably understanding Senate Bill 2155 better. But who can answer that question for me? This comes down to a handful of human beings who are responsible for the supervisory functions of SVB.
Tough for me to say that something's not in my lane. So
yeah,
and I also think tough for Vice Chair Barr. So it is our lane. But I what. So if I can address what it is you're asking though, it's I would say clearly supervisory failures. And let's not just say San Francisco. It's very much at the board. We are accountable. It's a delegated function. It's definitely at the board. The buck stops at the board on supervision, not at San Francisco Reserve Bank, although they're involved. So we need to learn the lessons, and we need to implement changes. It's not just supervision, though. We need to fix liquidity regulation because of the speed of the. It's just a different world in the old the regulation for liquidity, the LCR and the NSFR. They're just not adequate to a world where people are moving money around on their phones like that. So. We're doing all of that. I think we're doing it very transparently and rapidly. The piece of it that you won't be satisfied with is we in public service, people if they engage in malfeasance, if they conduct criminal behavior, if they break rules and things like that, they get fired. Nothing like that happened here. The San Francisco Fed they had identified the issues, they had notified the management team that they needed, but it just wasn't forceful enough. And that's a problem with our system, I think, and the way bank regulation is a very kind of procedural-oriented thing where you're raising things like that. And we need to be able to be nimble and more forceful where appropriate, not every day on every decision, but on where it's appropriate. So that's what I think we're working on now.
Well, thank you. And again, thank you. You've been very accessible. I'm going to try and request a meeting after the recess sometime this summer. I would like to get back with you, and we'll be submitting questions for the record. Thank you, Mr. Chair.
Thanks,